The hidden costs of car financing, understanding the fine print. Buying a car is often one of the biggest financial decisions we make in our lives. For many people, it's a necessary purchase that can greatly improve their quality of life and provide greater mobility and independence. However, the process of financing a car can be fraught with confusion, hidden fees, and unexpected costs. Viewers will gain a deeper understanding of the complex world of car financing and learn how to navigate it successfully. This video provides a comprehensive guide to the true cost of car financing, including interest rates, fees, and other expenses that are often hidden in the fine print. By demystifying the world of car financing, this video empowers consumers to make informed decisions about their finances and avoid common pitfalls. Over the course of the video, we will cover the basics of car financing, the true cost of car financing, hidden fees and charges, alternative financing options, and tips for successfully navigating car financing. This book provides a comprehensive and accessible guide for anyone looking to buy a car. Whether you're a first-time car buyer or a seasoned veteran, this video will equip you with the knowledge and tools you need to make smart financial decisions and avoid unnecessary costs. The authors of this video brings a wealth of experience and expertise to the topic of car financing. Their insights and advice are grounded in years of research and real-world experience, and they are committed to empowering consumers to take control of their finances and make informed decisions. I am confident that the viewers of this video will come away with a deeper understanding of car financing and a greater sense of confidence in navigating this complex and often confusing process. I commend the creators for their work on this important topic and urge readers to approach car financing with care and caution. With the guidance provided in this video, I am confident that viewers can make informed decisions and avoid the hidden costs of car financing. The basics of car financing. If you're planning to buy a car, chances are you've given some thought to how you'll pay for it. While some people are fortunate enough to be able to pay for a car in cash, many others will need to finance their purchase through a loan. This section will cover the basics of car financing, including how it works, the different types of car financing available, and the pros and cons of financing a car. Car financing is essentially a loan that you take out to pay for a car. The lender, which may be a bank, a credit union, or the dealership itself, provides you with the money you need to buy the car, and you agree to pay the loan back over a set period of time, usually 3 to 7 years. In exchange for lending you the money, the lender charges interest, which is the cost of borrowing the money. Interest rates for car loans can vary widely, depending on your credit score, the loan term, and other factors. The interest rate you are offered will determine how much you will pay in interest over the life of the loan, and will impact your monthly payment amount. It's important to shop around and compare interest rates from different lenders before you agree to a loan, as even a small difference in interest rates can add up to significant savings over the life of the loan. There are several different types of car financing available. Dealership financing is one option, where you obtain a loan directly from the dealership where you're purchasing the car. Bank loans and credit union loans are another option, where you obtain a loan from a financial institution. It's important to compare interest rates, terms, and fees when evaluating different financing options to find the best fit for your financial situation. There are both pros and cons to financing a car. On the one hand, financing allows you to spread the cost of a car purchase over time, which can make it more affordable. It may also allow you to purchase a more expensive car than you would be able to afford with cash. However, there are also downsides to financing a car. The interest you pay on the loan can add up to a significant amount, and you'll end up paying more for the car in the long run than you would have if you had paid in cash. Additionally, if you fall behind on your payments or default on the loan, it can have serious consequences for your credit score and financial future. Car financing is a common way to pay for a car purchase. It involves taking out a loan to pay for the car, and repaying the loan over a set period of time with interest. There are several different types of car financing available, and it's important to compare interest rates, terms, and fees when evaluating different options. While financing can make a car purchase more affordable, it's important to understand the pros and cons of financing before making a decision. The true cost of car financing. When you're considering financing a car purchase, it's important to understand the true cost of the loan. While the monthly payment amount may seem affordable, the interest you'll pay over the life of the loan can add up to a significant amount. In this chapter, we'll explore how interest rates and loan terms impact the total cost of a car loan, and how lenders and dealerships can use misleading financing terms to make loans seem more affordable than they really are. Interest rates are a key factor in determining the total cost of a car loan. The higher the interest rate, the more you'll pay in interest over the life of the loan. It's important to shop around and compare interest rates from different lenders before you agree to a loan, as even a small difference in interest rates can add up to significant savings over the life of the loan. Loan terms are another important factor to consider when evaluating the true cost of a car loan. The longer the loan term, the more you'll pay in interest over the life of the loan. While longer loan terms may result in lower monthly payments, you'll end up paying more in interest over time. Shorter loan terms may result in higher monthly payments, but you'll pay less in interest overall. It's important to carefully evaluate your budget and financial situation to determine what loan term is right for you. Unfortunately, lenders and dealerships can use misleading financing terms to make loans seem more affordable than they really are. For example, a dealer may offer a loan with a low monthly payment, but a very long loan term. This can make the loan seem more affordable, but you'll end up paying much more in interest over time. Similarly, a lender may offer a loan with a low interest rate, but high fees and charges that can add up quickly. To truly understand the cost of a car loan, it's important to look beyond the monthly payment amount and carefully review the loan agreement. This may involve reading the fine print, asking questions about fees and charges, and carefully evaluating the total cost of the loan over the life of the loan. While this may take some time and effort, it can save you a significant amount of money in the long run. The true cost of a car loan includes both the principal amount of the loan and the interest you'll pay over the life of the loan. Interest rates and loan terms are key factors in determining the total cost of the loan, and it's important to carefully evaluate these factors when considering a car loan. Additionally, it's important to be aware of the ways in which lenders and dealerships can use misleading financing terms to make loans seem more affordable than they really are. By carefully reviewing the loan agreement and understanding the true cost of the loan, you can make a more informed decision about whether car financing is right for you. Hidden fees and charges. When it comes to car financing, it's not just the interest rate and loan term that impact the total cost of the loan. There are also a number of hidden fees and charges that can add up quickly and significantly increase the overall cost of the loan. In this chapter, we'll explore some of the most common hidden fees and charges associated with car financing and how to avoid them. One common fee associated with car financing is the origination fee. This fee is charged by the lender for processing the loan application and is usually a percentage of the loan amount. The origination fee can add up quickly and significantly increase the total cost of the loan, so it's important to be aware of this fee and negotiate it if possible. Another hidden fee associated with car financing is the prepayment penalty. This fee is charged by the lender if you pay off the loan early, either in part or in full. While some lenders may not charge a prepayment penalty, others may charge a fee that can add up to a significant amount. If you think you may want to pay off the loan early, it's important to ask about prepayment penalties before agreeing to the loan. In addition to these fees, there may also be charges for late payments, missed payments, or return checks. These fees can add up quickly and significantly increase the total cost of the loan. It's important to be aware of these charges and to make every effort to make your payments on time. Finally, there may be additional fees and charges associated with the purchase of the car itself. For example, there may be fees for registration, title transfer, or taxes. These fees can vary depending on the state and can add up quickly, so it's important to be aware of them before making the purchase. To avoid hidden fees and charges associated with car financing, it's important to carefully review the loan agreement and ask questions about any fees or charges that are unclear. You should also shop around and compare offers from different lenders to make sure you're getting the best deal possible. Additionally, you can try negotiating fees and charges with the lender or dealership to see if they're willing to reduce or waive them. There are a number of hidden fees and charges associated with car financing that can significantly increase the total cost of the loan. These fees include origination fees, prepayment penalties, late payment fees, and additional fees associated with the purchase of the car itself. To avoid these fees, it's important to carefully review the loan agreement, ask questions, shop around, and negotiate with the lender or dealership. By doing so, you can save a significant amount of money over the life of the loan. Alternative financing options. Car financing through traditional lenders is not the only option available to consumers. There are a number of alternative financing options that may be a better fit for some individuals depending on their financial situation and preferences. In this section, we'll explore some of the most common alternative financing options and their advantages and disadvantages. 1. Personal loans. A personal loan is an unsecured loan that can be used for a variety of purposes, including car financing. Personal loans typically have fixed interest rates and repayment terms, and can be obtained from banks, credit unions, and online lenders. One advantage of a personal loan is that the borrower can use the funds for whatever purpose they choose, including buying a used car. However, interest rates may be higher than traditional car loans, and borrowers may be required to have a good credit score to qualify. 2. Home equity loans or lines of credit. Homeowners may be able to use the equity in their home to secure a loan or line of credit for car financing. These types of loans typically have lower interest rates than traditional car loans or personal loans, and the interest may be tax deductible. However, using home equity to finance a car may put the home at risk if the borrower defaults on the loan. 3. Credit cards. While not typically the first choice for car financing, credit cards can be used to purchase a car, especially a used car. Some credit cards offer rewards for car purchases, such as cash back or points. However, interest rates on credit cards can be very high, and using a credit card to finance a car may negatively impact the borrower's credit score. 4. Dealer financing. Dealerships may offer financing options through partnerships with lenders. While these loans may have competitive interest rates and be convenient to obtain, the dealership may mark up the interest rate to make a profit. Additionally, the borrower may be pressured to purchase additional products or services, such as extended warranties or insurance, which can add to the total cost of the loan. 5. Rent-to-own. Rent-to-own financing is a type of financing where the borrower rents the car and makes payments towards ownership over time. While this option may be appealing to individuals with poor credit, the interest rates can be very high, and the total cost of ownership can be significantly higher than traditional financing options. When considering alternative financing options, it's important to carefully review the terms and conditions of the loan or financing arrangement. Interest rates, fees, and repayment terms can vary widely depending on the lender and type of financing. Additionally, it's important to consider the total cost of ownership over the life of the loan, including any hidden fees or charges. How to navigate car financing successfully. Car financing can be a complex and overwhelming process. In this chapter, we'll provide some tips and strategies to help consumers navigate car financing successfully and avoid common pitfalls. 1. Know your budget. Before beginning the car financing process, it's important to have a clear understanding of your budget and what you can afford. This includes not only the monthly car payment, but also other expenses such as insurance, maintenance, and gas. By setting a budget and sticking to it, consumers can avoid overspending and taking on more debt than they can handle. 2. Shop around for financing. Consumers should shop around for car financing, just as they would for a car itself. This includes researching different lenders, such as banks, credit unions, and online lenders, and comparing interest rates and fees. Additionally, consumers should consider getting pre-approved for a loan before visiting a dealership, as this can provide leverage during negotiations. 3. Negotiate the terms. When financing a car through a dealership, consumers should negotiate the terms of the loan, including the interest rate and any additional fees. Consumers should also be wary of add-ons, such as extended warranties or insurance, as these can significantly increase the total cost of the loan. 4. Read the fine print. Before signing any loan documents, consumers should carefully review the terms and conditions of the loan, including any hidden fees or charges. It's also important to understand the repayment terms, such as the length of the loan and the monthly payment amount. 5. Consider a down payment. Making a down payment on a car can help reduce the overall cost of the loan and may result in a lower interest rate. Consumers should consider saving up for a down payment before beginning the car financing process. 6. Pay on time. Once a car loan is obtained, it's important to make payments on time to avoid late fees and negative impacts on credit score. Consumers should also consider making extra payments or paying off the loan early, if possible, to save on interest charges. 7. Keep an eye on your credit score. Car financing can have a significant impact on credit score, so it's important to monitor it regularly. Consumers can obtain a free credit report once a year from each of the 3 major credit reporting agencies, and should dispute any errors or inaccuracies. By following these tips and strategies, consumers can navigate car financing successfully and make informed decisions about their finances. It's important to remember that car financing is a significant financial commitment and should be approached with care and caution. By doing so, consumers can enjoy the benefits of car ownership without getting bogged down by debt and financial stress. This book that was authored by OpenAI's ChatGPT. With the company taking on billions of dollars in investments, this is the perfect time to find out ways for this innovative tool to help you with your finances. Audio for this book was provided by NaturalSoft Limited's Natural Reader AI software using their commercial license. Per their website, this license allows you to use its software and voices for commercial or public use. This includes, but is not limited to, YouTube videos, public announcements, broadcasts, and e-learning.